When these earnings come out for the fourth quarter of 2025, over the next few months, investors are going to be shocked by the amount of profits and free cash flow these miners are generating. This is different this time. It's getting bubblicious here. We're taking a little bit of gains and we're going to reinvest them lower. If you're investing in a gold company only because you think the price of gold is going higher, you're doing something wrong. You know what I mean? Combined with crypto, the combination of gold, the world's ultimate store value for 1,000 years, with crypto's instant transfer and frictionless exchange makes the world's ultimate currency. And that's what we're getting into.
I want to get to the question that everybody wants to know. Do you still see meaningful value in this space, or has the market finally started to price these gold miners properly? Hey everyone, this podcast is not investment advice, and I'm certainly not a financial advisor. Just a guy who spends too much time reading about markets. Before investing, do your own research, talk to a licensed advisor, and remember, risk is part of the game. All right, welcome back to another pod. When Garrett Goggin joined me last March, he walked through how he was navigating the gold market and the miners specifically within it. He laid out what he dubbed at the time the golden anomaly, a disconnect between the gold price and what certain miners were actually generating in margins and free cash flow. He saw an opportunity. Fast forward about 10 months, rates have shifted, deficits have increased, macro uncertainty has intensified, precious metals rallied hard, and many of the gold stocks Garrett highlighted last time played out extremely well, outperforming both the broader market and gold itself. Garrett spent decades inside financial markets, from the floor of the New York Stock Exchange to derivative desks overseas. And for the last 15 years, he's been almost exclusively focused on precious metals, as he's the founder and chief analyst at the Golden Portfolio. Today, we're going to find out whether he's still bullish on gold miners, what's changed, and where opportunity may still exist. So Garrett, Happy New Year. Welcome back to the pod.
Yeah, thanks, Aaron. Thanks for having me back. Nice to see you.
I want to jump right into things. It's been an absolutely epic rally. Anybody who had a significant weighting in precious metal miners probably outperformed the markets last year by a significant margin. Last time you were on, in March of 2025, you emphasized just how undervalued many gold miners were. Since then, obviously, massive rally. I want to get to the question that everybody wants to know. Do you still see meaningful value in this space, or has the market finally started to price these gold miners properly?
Yeah, we're getting there. Last time I spoke to you, Newmont was trading at a 55% discount to fair value based off their, free cash flow. I have a model. I cover a lot of the miners, and I use the current gold price, today's gold price, current production, current all-in sustaining cost, because, when the miners report each quarterly earnings, that's using an average gold price of the last quarter. So it's like backward looking. You know what I mean?
Right. Yeah.
The current gold price. So I use current production, current all sustained cost, current gold price. And then I look at basically gross margin using all sustaining costs versus enterprise value. And Newmont, last time we talked, was trading at a massive discount, like the largest discount to fair value, 55% discount. Like that was easy. That was this is a once in a generational lifetime opportunity to load up. And it's paying off. Newmont's gone up, from 35 to close to 100 here. Now I'm looking at Newmont right now. Newmont's trading at a 8% premium to fair value. But the thing is, these speculative blow off tops, they continue until the miners become overvalued. Each prior peak back in 2021, 2011, they traded like a 50% premium to fair value. You know what I mean? So we're not there yet. And then one big thing that's coming up right now, the thing that's going to be a major catalyst, I believe, the fourth quarter average gold price was $41.49. The prior quarter was only 34.53. That's fourth quarter was 20% higher than third quarter. When these earnings come out for the fourth quarter of 2025, over the next few months, investors are going to be shocked by the amount of profits and free cash flow these miners are generating. That's probably going to provide the catalyst to push these things on the next leg higher.
I know last time you were on, one of your more a little bit speculative comment, but you were insinuating that you thought maybe a heavyweight investor, perhaps like someone like a Buffett, could eventually buy into one of these tier one gold producers like Newmont. Obviously, Newmont had a great year in 2025. I own it. Do you still think the gold miners, some of the top tier gold miners, could attract that kind of institutional interest? Is it plausible at these levels, or is this really now just speculative?
The discount's gone now. The cream of the crop investors like Buffett, they're probably not going to be interested. But the typical institutional investor, they chase. If they're lagging performance based on their benchmark, they have to get involved with the sector whether they like it or not. And I know a lot of them don't like gold miners, but you start looking at Newmont's free cash generated, the amount of dividends that they pay, I think it's like $2 billion. The amount of share buyback, I think it's like $4 billion, and they bought back another $5 billion, $6 billion of debt. Like, just the shareholder value generation is staggering. There's a few smart investors. There's a guy, Paul Singer, he runs Elliott Capital. Paul, he's traditional. And the thing is, he's a gold bug, but he won't admit it. Because if you go full gold bug, like, you're going to lose your assets, right? You can't get one sector. So he invests across many, many sectors. It's an activist fund. But he started Triple Flag. He owns, 60% of Triple Flag royalties, because he knows royalties are the best way to play gold. So that's a major holding for him. So there's, smart investors. And then you got Dalio at Bridgewater that has owned a lot of gold. And we're going to see more and more and more. But the thing that's wild is, this is truly the period in time that gold bugs have been waiting 50 years for, right?
Yeah.
You can go to the gold shows. It's the same old guys. And, just another year later, and they're just waiting for gold to explode. And like, it never happens. And then gold goes up, and then it goes down, and it goes up, and then it goes down. It's like, we're here. Gold's never had this significant demand. It's from central banks before, right? Central banks aren't buying dollars. This is truly the end of the dollar system. Each world reserve currency lasts like 100 years. Like, we're there. Yeah. Like, something's coming next. The Brazil, the BRICS, and India and Russia, they're coming out with the unit. The unit, it's like it's happening. It's a digital currency, and it's backed 40% by gold. China's stockpiling gold. They're the Shanghai exchange with silver is trading at like a 10% premium to silver. They're stockpiling it. They're not buying treasuries anymore. This is truly like end times for the dollar. And then we got Trump. And Trump and Bissett, they're going to lower rates to 1%, and they're going to try to jack GDP up to 20%. He's like, I wanted it 24%. But what's going to happen is that basically everyone on paper is going to be a millionaire, but a bottle of Coke's going to cost $20 or more. Yeah. You know what I mean? Yeah. It's straight up devaluation, and that's the only way out of the debt and the amount of liabilities that the U.S. has is through growth and through inflation.
If that plays out, then wouldn't it make sense that the gold miners are still cheap? Because that would mean gold's probably going to 6, 7 or higher.
Well, I projected using the current price of gold, right? Like, I try to buy, free cash flow at a discount. I try to spend, dimes of enterprise value for dollars of profits, right? So, the miners based off the current gold price, are basically fairly valued, maybe, 5%, 6%, overvalued based off the current gold price. But yeah, this gold price right here at 4,000, and I've been having, my mind is spinning, having to adjust my price target models higher. For 2025, the average gold price was 34.48. And now I'm pushing it to 4,000, 4,500, 5,000. You start putting 5,000 into your models, and it's staggering. But like, we're close to being there because, gold's trading. What's gold trading at today?
4,500, 10% base, effectively a 10% jump, and we're at 5,000.
Yeah, it's not too far away. And then the gold anomaly, like these smaller developers and that are coming into production or they're building out. I was just looking at G2. I think I did it at 4,000. I didn't even do it at 5,000. G2, they just came out with the economic assessment on OCO. And, I modeled it. I basically nailed the estimate. But their target, I got it at 4,000. That's worth $6 billion. $6 billion. OCO was worth $6 billion at $5,000 gold. G2 trades for 1.1 bill. It's undervalued by, God, I don't even know. A huge amount.
Because I have these concerns as well. Like when these gold bulls come, you wait so long. We effectively waited, 8 to 10 years for this gold bull market. And when they end, and it lasts for but bear markets or dead markets last for a long time. I don't want to get stuck in these gold miners when that happens.
Right.
But I also have trepidations about selling. I own a lot of gold miners, a lot of the major gold miners. I guess what I'm trying to say is, if you're trying to find value in the space, and in past bull markets, usually starts with the price of gold, then it goes to the majors, then it goes down to the mid tiers, developers and juniors. We're starting to see it in the developers for sure. We've been seeing it, but the juniors still haven't really exploded like in past bull markets. What do you think about that thesis? Does that still hold in this bull market? That's the money's going to trickle down, because we haven't seen a ton of M&A from the majors.
No, it's true. Although there's a couple of things that have worried me. I feel the same way you do. We've been waiting a long time. You don't want to get caught at the top. When I told my subscribers to take 20%, and the reason why is because one of the things I have, all gold bull markets have a roof of silver. Back in 2011, silver ripped up higher. Back in 1980, silver ripped up higher. And gold, that was when gold topped too. And that was it for 20 years. And I regressed silver versus the gold price since 1971. And, that silver price is like $96, $97. Let's call it $100. That would match the overvaluation in 2011 and then in 1980. So, and then silver's a runaway train here. Like it's close to breaking out to another all-time high. They're still trading at an 8% premium to China. You can't stand in front of a runaway train. So it's great to see, but it's a little concerning, right? Because that's what happens when the market tops. It spikes up 10, 20, $50 higher, day after day after day. And that would be it. And then there are a couple deals. Well, there was Highlander Silver bought Bear Creek, bought Karani. Like, I've been in the industry like 20, 30 years. I have known Karani for 30 years. It's been a dog for 30 years. And now everyone's going crazy about it like it's the best upcoming silver mine. And, I don't know when these things get flying. And then Discovery with Cordero, Cordero, like big low grade. They're low grade, big ounce projects. Cordero's like, it's a base metal mostly. The silver grade's like, 20 grams per ton. But I'm friends with Peter McGough, like the world famous silver geologist that founded Juanicipio from Mag Silver. And he shared a study with me by Archie Bell, who was the head of exploration at Noranda. And he showed, there was a study, and it was a back of the envelope calculation that showed low grade moose pastures will remain low grade moose pastures whether the silver price is 20 or 80. You know what I mean? Because when inflation pushes gold and silver higher, it pushes costs higher as well. So when the gold and silver price rise, the costs rise, and then these low grade deposits are no more profitable at 80 than they were at 40. But there's a lot of crazy things going on, right? You get oil's down.
Cheap energy.
It's a cost. Maybe Karani, maybe Cordero, like work at these prices. But that would be the first time in 30 years. You know what I mean?
Right.
It's against the probability. It's against the statistics and the quant. But is this truly the one time where like these, low grade projects work? And I don't know. It could be.
So when you look across the precious metals equity space today, let's just say gold and silver, you seem a little bit cautious. So are you seeing better opportunity, or is it just equal in silver miners given how small and constrained that market is, or do you still prefer gold miners?
I prefer gold miners. Like if you look at gold miners versus silver miners on an all-in sustaining cost margin, gold mining is more profitable than silver mining. Over long periods of time, the silver miners, they'll bounce along, a little bit. They'll make money, lose money, make money, lose money. But when we get in periods like this, they go on a tear. Just gold miners have higher margins. They're more stable. It's more.
Why is that?
Why? I don't know. One of my metrics, I haven't updated my metrics for silver miners before. It just has to do with all the sustaining cost of silver. Like I think it's close to $30 per ounce right now, and the average all sustaining cost for a gold miner,
17, 18?
Yeah.
Maybe a little higher.
All sustaining 16. Let's call it.
Yeah, okay.
1,600. So if you take the gold price divided by 1,600, it's higher margin than the silver miners.
In a world of rising deficits, currency dilution, and market volatility, many U.S. investors are choosing to diversify their retirement accounts with assets like physical gold, silver, and even crypto. This video is sponsored by iTrustCapital, which offers a platform for Americans to hold physical gold and silver, as well as crypto, directly inside a tax-advantaged IRA. Designed around transparent pricing with clear premiums over spot and no hidden storage fees, iTrustCapital offers something that still isn't standard in the precious metals IRA space. So if you're a U.S. investor looking to learn more about owning gold, silver, or crypto inside an IRA, use the link in this video description. Americans may be eligible for a $100 funding bonus when opening and funding an account with iTrustCapital. Let's talk about the developers for a second. Now, last time you came on, you mentioned a few. You also talked about Rio 2, which thank you, by the way. When you mentioned it, I did my research. It was a great trade in 2025. Which projects or companies, you touched on a couple, stand out to you as potential future producers, like the mines of the next cycle, let's say? Which projects are you looking at on the development side?
Well, I haven't gotten there. As far as mines of the next cycle, like, I don't know, maybe to be Carani and Cordero. Like, I got some readjusting to do, but who knows? But the thing is, I speak to a lot of people and I go to a lot of conferences and everyone's looking for the next great thing. Do you know what I mean? It's like, what about this one? I heard this one's great. It's like, whoa, like back it up. Like, you want to own the best world-class projects and maintain exposure to them. Like, you don't want to be trading around looking for the next good thing and the next good thing, because when the price of gold and silver go higher, all the miners pull their skeletons out of the closet and they dump it on the retail public, right? They just put a new name on it. Rio 2 still works. Rio 2 is coming into production right here, right? They are beginning production this month. I wouldn't be surprised if their first pour wasn't weeks from now. And Rio's trading at 1.4 bill. And then off their initial production, it's fairly valued. That doesn't even contain the expansion, the 4x expansion to 80,000 tons per day. Do you know what I mean? And then you get Oko like that. That's owned by G2. That's a few more years away. You get Montage. You get Phoenix. Kone, that Montage owns. That's going to be in production in 2027. And the thing that's wild is, I've been covering these companies for a long time, and I have my economic estimate, on these companies, and I look at it, and it looks great. And then all of a sudden, the valuation starts catching up to, NAV really. And then these companies basically just double all their projections. Coney Montage found all these satellite mines. That's basically doubling the grade, keeping production steady at 300,000 ounces per year instead of it dropping down to 200,000 ounces per year. They just basically doubled the NAV, and G2 did the same thing. Like, the best world-class projects, they keep getting better and better and better. They got the grade. I follow the grade. That's the only thing I care about. And that, and that ties into silver. That's why I can't get excited about Corani and Cordero.
Right.
But I was excited about Las Chispas with Silvercrest Metals. I was excited about Mags Juanicipio, and all those were acquired. Grade's the highest correlated, statistic to determine profitability.
When you look at developers, for example, what's your minimum benchmark for average grams per ton of gold?
Yeah, it's all over the board, right? Because you get big open pits. Rio 2 that's operating in Phoenix. Their average grade is only like 0.54 gram, but their mining costs are $16 per ton. Down there. So it's extremely low grade. It's low grade, but it's extremely profitable due to the low mining cost. And then, you get higher grade operations. I don't know, K92, I think operates at 11 grams per ton. That's in Papua New Guinea, kind of the Wafi Golpu, owned by Newcrest, a really high grade mine. So you need to look at the grade and, the type of mining that they use, whether it's open pit, whether it's underground, whether it's long hole, or, what sort of mining technique they use, and also the cost in that region. When I build my economic estimates, I look at nearby mines. For G2, I use Marion, I believe that it's owned by Newmont, and I used one other nearby mine to determine costs in the region. But, costs in the region play a major role in determining profitability and cost, but it's all over the board. But when I see really wide width, good drill results, I'm like, that's on my radar, like no doubt.
Mm-hmm. Do you mess around with any of the explorers, or is it just developers and miners?
My GP10X, we own explorers. We own, 5 or 6 explorers. Basically, I'm looking in the trough of the Lassonde curve, right? Talk about it's the first one is exploration.
Yeah.
Well, A-Mark, right? A-Mark had one drill hole, and they discovered this huge, copper gold porphyry. And Freeport jumped in, and A-Mark's probably going to get bought out. But if you have one really good drill hole that's amazing and wide width and high grade, when you keep drilling, the chances are you're probably going to find more and more and more. Do you know what I mean? Mm-hmm. So I'm not betting on like blind discoveries. That's like betting on which tree will get hit by lightning. But I wait for the drill result to be reported, and then the stock might be 2x, 3x higher, but more drill results are coming out because everything they do adds value. They start drilling, they build a resource, they do an economic estimate, they develop reserves. It's just value. And that's the stuff that I like and that I follow. Like, I see the gold price as just the cherry on top, the whole value create an ice cream sundae. I look for companies that have a roadmap to generate value. Like if you're investing in a gold company because you think, only because you think the price of gold is going higher, like you're doing something wrong. You know what I mean? Because if you use $3,500 an ounce gold, G2 still undervalued, Rio 2 still undervalued. Right. More focus on stuff that the miners or we can control versus the gold price that we necessarily can't control.
Overall assessment, like there's obviously some pretty well known investors in the gold space who've suggested it's probably time to take profits. Obviously, nothing moves straight up. Bear markets in gold are long and tiresome.
Yeah.
We've already had a strong multi-year run, 2-3 years. How are you thinking about risk in the space right now? Is it time, in your view, is it time to trim? Or how are you dealing with the risk?
I told all my subscribers to take 20%, sell 20% across the board. We sold a couple silver miners. We sold Highlander that we've realized gains of close to 1,000% on because I didn't like their acquisition of Bear Creek and I don't like Corani. We sold Argenta silver. We added close to a year ago, and that thing barely went up. Like in the greatest silver market of all time, it barely, like something's wrong there. I don't know what. So we took some profits in silver, took 20% profits across the board. But the thing is, gold, this is different this time. Like it's getting bubblicious here. We're taking a little bit of gains and we're going to reinvest them lower because, gold and silver are going to be higher, supported by, central bank demand and, end times for the dollar. And this time is truly different, but it doesn't mean you can, just hang on and, not try that. It's not going to act like a normal market. You know what I mean?
Sure. Yeah. So when because I love how you think about investing in the gold mining space. It's practical, it's numbers based, I like it. So, but when you take capital out, when you take gains out, you just keep it in cash and wait for a pullback? Like what do you do?
Yeah,
really?
Keep it simple, keep it in cash. Just because, like we've been in the industry for a long time and, we go through 20 years of pain, and an opportunity every day. And, and right now, there's a lot of new people coming on board too. And when it gets this speculative, like usually, the market kind of peaks out and will trade down for a little bit. But it is truly this different this time. Gold is going to go higher. God only knows how high it could go. The higher gold goes, the better off the U.S. is, right? Because the U.S. owns, 800 million ounces. And at $10,000 gold, it's backs 7% of their debt. At $25,000 an ounce gold, it backs like 35% of their debt. Like, the U.S. is on the train. And then, you get the whole crypto revolution, the whole Genius Act, right? They're tokenizing the dollar with Tether, and then bringing crypto and stable coins into the banking system. Like, I don't think the government knows like what they're getting into because Tether they're regulated. They can't pay any interest. So like you can be in a bank and you can own Tether, but you're not getting interest. But there's 100 other crypto institutions out there where you can get 5%, 6%, 8%, 10%. So that money's going to be leaving the banking system and the government's going to have to back it all up. The government believes Tether is going to provide demand for U.S. treasuries and not. They're opening Pandora's box. That's going to be a conduit like out of the U.S. dollar. And it's going to be going into gold because Tether's got their tokenized Tether gold. They're buying 2 tons of gold per week. Like I met
that much?
Yeah.
Wow.
I met one of the top guys at Tether in Beaver Creek. He's like, listen, he goes, Tether Gold only has $2 billion in assets. Tether's got about 200 bill. He goes, Tether Gold's going to be bigger than Tether Dollar because nobody wants exposure to the dollar. You get crypto holders, right? Crypto was invented to get away from the dollar. Like you don't want dollar, you don't want US debt. So it's going to be going to Tether Gold. They keep on buying more and more and more. And then you get Justra and one of the other guys, they started a tokenized gold product that yields like 5% or 6%. Like gold is coming back to the monetary system combined with crypto. The combination of gold, the world's ultimate store value for 1,000 years, with crypto's instant transfer and frictionless exchange makes the world's ultimate currency. And that's what we're getting into. There's countries that keep coming out every day. You look, they're coming out with their own gold tokens. And we're going to have a whole plethora of gold tokens that are issued by each nation. They're going to trade on the financial metrics of each individual nation. Like it's wild what we're getting into. And that's what gold's smelling out right here. And that's why the supply demand equation is different than it ever was.
Interesting. With that backdrop, I'm not saying you are, but how could anyone be bearish on gold?
Short term.
Right.
Short term bearish, looking for, like the money's not here yet. Looking at all investor metrics, the amount of money in the shares outstanding GLD, shares outstanding SLV, the amount of money in gold assets, like it's still near the lows. Like we have a long way to go. And then the Buffett indicator, right? The Buffett indicator shows, it shows the Wilshire 5000 versus underlying GDP. And right now it's at a peak. And it shows how overpriced growth is versus value. This is the peak and we haven't even started turning down yet. And the last time the Buffett indicator was this high was 1970. Gold went on a 10-year run. In 2000 and gold went on a 10-year run. And right now, the Buffett index is still right at the peak. Like, maybe this 10-year run hasn't even started yet.
Jeez. So we could still be early innings.
Yeah, based off investor flows, it kind of looks like it.
Yep.
So
when you
let me say one more thing.
Sure.
You look at the price of silver at 80, you look at the price of gold at, I don't know, 4,500, you're like, oh, it's really high. Yeah, but we've had 50 years of runaway debt and deficits that are absolutely staggering and enormous. And now gold is finally trading on its true supply and demand fundamentals for the first time. That it's going to be wild to see how high the gold price and the silver price can actually go.
In a world of rising deficits, currency dilution, and market volatility, many U.S. investors are choosing to diversify their retirement accounts with assets like physical gold, silver, and even crypto. This video is sponsored by iTrustCapital, which offers a platform for Americans to hold physical gold and silver, as well as crypto, directly inside a tax-advantaged IRA. Designed around transparent pricing with clear premiums over spot and no hidden storage fees, iTrustCapital offers something that still isn't standard in the precious metals IRA space. So if you're a U.S. investor looking to learn more about owning gold, silver, or crypto inside an IRA, use the link in this video description. Americans may be eligible for a $100 funding bonus when opening and funding an account with iTrustCapital. It still seems to me, I'm reading between the lines, but it still seems to me that if you're going to play the gold market, if you want to play the gold market, the best way to play it still seems to be not necessarily the juniors, more the majors and developers if you want to take more risk.
It's a tough question. I have a couple different portfolios and I sell the golden portfolio. The majors, you're better off just buying the GDX, right? It's easier. They're going to do what the gold price does. I like the trustable song curve. I like developers that are up and coming where all they have to do is execute to drive value. So regardless of what the gold price does, their underlying value is going to go from 500 mil to $1 billion to $1.5 billion to $2 billion because they execute well. That's my favorite spot. But the best way to play gold, it's the royalties. I've been covering the sector for 25 years. I've seen the acquisitions year after year. I've seen how they operate. And I built a royalty portfolio. I'm like, God damn, what if you just invested in royalties? Since 2007, when Franco got spun out, you'd be up 35,000%. And the royalties do best because they're run by limited amounts of people. They got a CEO, lawyer, and they got to count the money, and they got a geo, and they're good. Versus miners, they got hundreds of miners. Royalties, they pay money up front, and their costs never change. Versus miners, where their costs keep on increasing as the gold price increases. Royalties own NSRs and streams on hundreds of projects. If you get a miner and one of their mines goes bad, especially if they're 1 or 2 mine miner, it's all done. The stock is over. Royalties, all they need are 1 or 2 to get lucky. And
who do you like in the royalty world?
I like the mid-cap royalties the best. Franco's awesome. Wheaton's awesome. I like Royal Gold. Royal Gold is the only gold stock that's in the S&P Dividend Aristocrats portfolio. They have increased their dividend for 15 years consecutively. The big ones are great, but the smaller ones, all the good smaller ones get bought out. I had Origin in the portfolio. Origin got bought out by Triple Flag for Silicon Merlin. I had Sandstorm. Sandstorm got bought out. And just these acquisitions happen again and again and again and again. So there's a few newer royalties that are starting to pop up. But there's a few in the, Elemental royalties. Elemental trades for, 800 mil market cap. And then did you see how Tether went in and they bought positions in a lot of the royalty companies?
No, I didn't see that.
You didn't see that? They came out like a month ago. They staggered the royalty industry because they bought equity stakes in Metalla, Elemental, gold royalties. And they did that because their business model resembles the royalty business model, right? You got Tether with $200 billion in assets. They only got like 5 or 6 employees, right? So they understood the best way to play it is limited overhead. So they went right after the royalties. And they just added, Tether just added some more positions in the royalties. So again, this connection between crypto and gold, it's getting closer and closer and closer.
Interesting. Last question. What do you think of Bitcoin? Do you think about it?
I bought Bitcoin at 10.
Damn. Well done.
Sold it at 200.
Well done.
Yeah, I bought a house. I would have been all done. When I saw that, I was like, this is digital gold. I was blown away. I couldn't believe it. But where it's at right now, it just, everyone's on board. I own Bitcoin. I quit my job.
Yeah.
All I do is hang out and wait for Bitcoin to go to 1 million. Like, that's not how markets work. Do you know what I mean?
Yeah.
And what I'm kind of seeing now is that, the crypto digitalization technology works, but Bitcoin as a crypto token is almost secondary right now. Like, I invested in a seed round for Securitize. Securitize is going and they're digitalizing every security, all the stocks, all the bonds, private equity funds, all that. Like, that's happening like right now. Wall Street's embracing it. And then the tokenization, I think it leads to gold. Do you know what I mean? Like, what would you rather have? Like, Bitcoin, $80,000 password to nothing, or actual, your digital gold. Like, crypto is unlocking gold status as the true world's reserve currency for the first time ever.
Yeah, that's Peter Schiff's in the same camp as you in that regard. So that's interesting. Garrett, it's been another great conversation, man. I appreciate it. I love chatting with you about the space. I think nobody breaks it down in more common sense ways. And once again, you've given me some opportunities to do some due diligence on. So I appreciate it. Thank you very, very much for your time today, man.
Awesome. Thanks, Aaron. Nice talking again.